A market crash is coming. Will you be ready? That's what we're here to help you with, among many other things. How to make money in the meantime. Now, we are not a stock calling service, we're an education firm. Want you to train with us every day. 10 minutes is all we ask to help you become a charting master. It's all available for you for free here every day. Be with us. And don't forget, if you're a subscriber, we have that special training on how to survive the crash when it comes in the future. If you're not subscribed, go to chartingwealth.com, sign up for free, and you'll get that special training. Markets for the day we saw on Tuesday recovered some. We saw the S&P 500 up 0.75%, NASDAQ 100 up about 0.5%. Consequently, we saw bonds down a little bit, gold down about 0.5%. Let's jump first into the S&P 500. We're looking at the weekly chart 2 days in to the latest week. So far, we see a red spinning top. We see price not quite pushing through the weekly trend line. When we look at the derivative oscillator, we can see that it is losing energy and again continues to lose energy since it peaked all the way back on the 1st of March. Really a sideways slide, bumped up over the past week and then started moving down. Now, because we ended that prior week with a green up candle, not nearly as big as it had been after significant down move at the end of the week. So we go from the weekly S&P chart down as we always do. Always start with your biggest chart, work your way to the smallest. We had seen where the two-day price percent oscillator was laminated for quite a while, actually going on, starting all the way back on the 2-day chart. It was laminated for quite a while, running over several 2-day periods, trying to figure out what it was going to do. Crossed over going up back on the 2-day candle ending Monday the 18th, went up for another 2 days, and then of course started moving over, crossed over, going down on Friday, and this latest 2-day candle representing Monday and Tuesday is a red spinning top tending down. We've pushed through the 2-day trend line, but we're now above the weekly trend line. We are in a down move on the 2 days, so we're not in a trade with that weekly moving up, 2-day still moving down. But we have some hope with a bit of a recovery on the day on Tuesday about things moving back in an upward direction. We can see on the 4-hour chart, derivative oscillators now losing downward momentum. Price percent oscillators flat, maybe heading up a little bit. A bump up in the morning, bit of a pullback in the afternoon. So we'll continue to keep our eye on things. Price is still below that weekly trend line, above the 2-day trend line. You know what we need to do though? That weekly trend line is not, that 2-day trend line is not accurate since of course we had the crossover going down. So what we need to do is reset that. Always reset your trend lines or get rid of them when they're moving in the wrong direction. As soon as it changes, you can't always completely reverse them, but as soon as you have a second candle that draws after that cross, you can darn sure do it. And remember, you always draw your trend lines bottom up, top down. Keep that in mind. You got red candles, you start from the top. You have our green candles, you start from the bottom. We go now to that 4-hour chart, and then we can see, yes, price movement is below the down candle and above on the 2-day chart and above the weekly candle. So we head from the S&P 500, again, letting it sort itself out, figure out which direction it is going to move to the Qs, the NASDAQ 100, and we see it up quite, again, about 0.5%. Not as much as the S&P, but we see that it is up. Derivative oscillator lost a little bit of momentum for the week so far. Price percent oscillator still heading up nicely. We have a red open box candle forming for the week. Again, not a strong red down candle that we had seen in the past. And price movement is above the weekly trend line at this point. We go from the weekly to the 2-day chart. And of course, we did in this latest 2-day candle break through what had been 8 days, 4 2-day candles moving up Got a red spinning top, means indecision tending down, hasn't crossed over going down, however. So we're still potentially in a play. Some of you may have stayed in through this on your Q's trade. Why? Because, of course, you didn't have a crossover on the 2-day chart. Price movement still above the weekly. Again, there are reasons, and as you practice and you use your trade worksheets, which are available for free in the show notes, and you practice season after season on these 4 charts, you will get an idea as to the temperature of these things. And instead of necessarily pulling the plug, remember, when you get in on the 4-hour chart in the typical way of trading, and you stay in based upon the 2-day and the weekly. So we saw weakness, significant weakness in the 2-day, weekly still looking good, and we'll continue to watch. 2-day actually gained momentum on the price percent oscillator. Now we go to the 4-hour chart, and we can see where we had 2 big down candles. That, of course, occurred. We saw things occur on Monday with that huge slam down, and then, of course, we saw that was Monday. That was actually the 4-hour candles is Friday afternoon and Monday morning. And then, of course, we saw things Monday afternoon recovering some, nice up in the morning on Tuesday, bit of a rollback on Tuesday afternoon. So we see that the 4-hour chart still heading down. Derivative oscillator actually isn't just flat, but it lost a little momentum. But that price percent oscillator, keep your eye on that. That, of course, is a concern, still heading down on the 4-hour chart. Good to see that price movement is above the weekly, but it is below that 2-day, not a lot below it, so keep your eye on things. If you're waiting to jump back into an up move, if that makes itself available, then of course you want to wait for that 4-hour chart to cross over going up. And again, encourage experimentation, encourage you again to practice trade. That's what we're all about. We want you to practice trade with us, learn these charts, learn the ebb and flow of price movement, fear and greed as it plays out in the marketplace, and get good at doing this season after season. We're just coming out of the fall-winter trading zone, as you can tell, where price moves tend to be nice and strong and long-lasting. And as we get into the summertime, through spring into the summertime trading zone, it's going to get a lot herky, jerky, and a whole lot worse. What do they say? Sell in May and go away, live to trade another day. There's a reason for that, because more and more volume goes out as we get into the summer months. More of the big money goes on the sidelines and things get sloppy. But again, if you can trade in the if you can trade in the fall-winter trading zone, that's great. If you can trade in the summertime trading zone, that's even better, because that's the toughest time of year. And you're going to watch and see, like every year, we get into that area unless there's some systemic crash. But remember, those typically occur in October. Now, you can have move downs in spring and all spring lows. But again, all market crashes have occurred in October. Now, let's go from, we're going to leave the Qs and stocks. We're back on the weekly chart going to bonds. Now, bonds have been up super strong, actually strengthening over the last 3 weeks. Derivative oscillator losing a little bit of that upward momentum. Price percent oscillator still heading up. Bonds down for the day just a little, 0.07% price movement well above the weekly and the 2-day. We go to the 2-day chart, and of course we see 4 days worth of strong 2-day candles, 2 of them. Derivative oscillator gaining upward momentum, price percent oscillator heading up and just spiking into outer space, into sort of the no oxygen zone above the Bollinger Bands. Things don't tend to stay above the Bollinger Bands very long. They're, of course, volatility bands. They tend to come back in them. We look at the 4-hour chart, and of course we can see that bonds have been leveling out slowly. We had not any up movement in the morning, some in the afternoon as far as our 4-hour chart goes. But again, these are our Heikin Ashi candlesticks for the day. Overall, we're looking with Heikin Ashi at average pace. And again, what we really see is a sideways slide through the day. What's happening with bonds? Are they simply gearing up for more up movement? Could be, and we'll just wait and see how they shake out there. But again, those of you who jumped in bonds back after the crossover, of course, we've seen things moving up quite nicely, somewhere around what, a 122 up to, gosh, a high back on Monday afternoon, a 126 almost. So not bad in the course of just a few days. So we'll continue to keep our eye on bonds. Again, remember, if you're in that trade, use your 2-day and your weekly to really help you understand what's going on with price and how strong those movements are. Lastly, as always, we go to gold. Gold down for the day, 0.50%. You know, I keep hoping gold's going to cross over going down. We're almost laminated on that red signal line. Derivative oscillators gaining downward momentum. But of course, we have a big, well, not a big, but we have a decent sized green up candle so far. One day doesn't make a weekly candle, of course. So we still have a decent sized green up candle, no wick on the bottom. Of course, that shows some weakness in a green candle, but a nice wick on top. And so as we continue to watch and see what we see on the weekly chart, and in fact, you know what we could do now that we have some movement to allow us to do that, because we never lost that up movement. We'll go ahead and draw. We don't draw on a candle until it's complete, but we can put the two candles together for the 2 prior weeks, and we'll continue to keep an eye on gold. I keep hoping it's going to cross over going down so we can practice shorting it, but you can see on that 2-day chart we've got 12 days, 6 candles of decent up movement, but hasn't crossed over going up yet. Looks to be getting closer and closer, but until a crossover occurs, it hasn't occurred. So we'll wait and see, still in a confirmed down move on that 2-day chart. But again, pushed through that many days ago. Derivative oscillator may be getting close to crossing over going up. We're going to have an up day for that. And again, that's where we are on the 2-day. Lastly, look at what we see on that 4-hour chart. That's where we see things having topped out in the afternoon on Monday, down in the morning and the afternoon. Again, gold down 0.50%. Are we going to have that 4-hour chart finally, after many days, crossover going down? And will that drag the weekly down before the week's out? It's possible. We'll continue to watch and see. We'll keep you posted. And of course, we haven't had a weekly vertical crossover in quite a while. When we have one of those, everybody who signed up for our text messaging service will get notified. If you live in the United States, you can sign up for it for free. How to do it is in the show notes. You just text literally to the number 33222, the word Charting Wealth, one word, and you get on our list. So if you live out of the country, we don't have that texting service available internationally, but all you got to do is listen to the comprehensive review and forecast we record every Friday afternoon at the close of the markets, and we'll tell you about those. If you haven't purchased our book, man, we keep getting orders in internationally. Now that we figured out how to provide that book to you, write us, cw@chartingwealth.com. We will send you an invoice through PayPal. Pay that. We'll ship your book wherever you live in the world and can get mail. We'll be happy to take care of that for you. If you're at the International Space Station, it might take a while. And if you're in the United States, of course, order our book. You'll see a link in the show notes, Charting Your Way to Wealth, if you want to understand what it is we do here. Spiral bound, a little more expensive, but I like the fact that you can put it open on your desk, easily make notes on it. It'll stay open. You can use it as a training platform. And also, if you really want to jump into things and really do the deep dive, become a Patreon supporter. Depending on your level, you can get a book for free. You can also get a 15-minute, once-a-month telephone call from me talking to you about what you're interested in. And of course, all levels of Patreon membership, we allow you to participate in our monthly Q&A, where we help answer the questions that you have, along with chart reviews of your favorite stocks or ETFs. Folks, it's that easy. All the links are in the show notes. God bless you, my friends. We're here for you. We know you appreciate what we do because we get so many great emails from you. You guys have made us like number 2 or 3 in the world when it comes to stock charting, stock market, stock investing, stock training. Thank you so much for your support. God bless. All the best from the whole team here at Charting Wealth World Headquarters.